Rallying stock market and the impact of quantitative easing were hot topics today at the Hedge Funds New York conference sponsored by Bloomberg Link. And while many investors are still wary of equities, hedge fund manager Orin Kramer told the group that betting against U.S. stocks may just be a losing strategy. Kramer is also a former chairman of New Jersey's pension fund. He's here with us now, and we appreciate you stopping by and spending a little time with us.
Thank you. Let's
talk a little bit about quantitative easing, because at the beginning of, throughout November, the market did pretty poorly, and I got this sense that participants in the market were worried that the Fed may not fulfill its entire $600 billion quantitative easing promise, I guess, or forecast. What do you think about that? Because the economic data has come in a little bit better than the Fed expected.
Well, I'm sure the attitude internally inside the Fed is we're going to watch the economic data just like everybody else does. But I think their central case internally has been, even if you got 2.5% GDP growth next year, you're looking still probably at 9+% unemployment a year from now. And that creates a lot of political pressure. And I think the expectation of the Fed is most likely case we're going to do $1 trillion or more.
From an investment perspective, Orin, I talked with Glenn Dubin of Highbridge today, and he said, don't fight the Fed at this point. He said, don't fight the Fed.
Right.
With all of this easing, so in terms of how it plays out in the markets, do you agree, with this out there?
There are a lot of people who are critical of quantitative easing,
right,
because how do you reverse it? And it looks to the Chinese like financial protectionism, et cetera. But on the other hand, what Glenn said is 100% correct historically, which is to say the Fed may do something that's wrong in the long term, like keeping rates too low earlier in the decade.
Right.
But in the short term, the Fed tends to win. That's where it comes from. Don't fight the Fed.
Do you prepare for the problems it could cause in the long term, for inflation that maybe could come from this in the long term?
Or other bubbles?
Well, there are bubbles, there's inflation. There's also, the path of U.S. fiscal policy is not sustainable. Despite the better noise about the deficit commission, I think the probability of getting something real done in the next couple of years on the deficit side is near zero in this country. States are in much worse condition than the public numbers suggest. So you don't have to hypothesize about inflation later to be concerned about government debt levels in Europe, household debt levels in the United States, federal deficit, and where the states stand.
So what does that say to you as an investor? You don't want to bet against U.S. stocks right now because the Fed is behind it with quantitative easing. But on the other hand, you're so bearish about really the whole global situation.
Creates schizophrenia. It's a serious problem.
So how do you work your way around it?
No, it is an interesting, it is a dilemma because the structural background gives you a set of challenges you've never had before. On the other hand, managers get paid for what they're doing this month.
Right.
And the Fed is basically saying, we're going to tax the hell out of you if you own risk-free assets. And that will push people into risk assets, which is happening.
Something that came up at this hedge fund conference here by Bloomberg, there was a gentleman who said the U.S. is trying to spend their way out of this. And you look at Europe and they're trying to save their way out of this. Well, in the end, one of them is going to be wrong. Who do you think is going to be wrong if you buy that scenario?
I think actually the U.S. is trying to spend its way out. I wouldn't make that characterization, meaning aid to states and localities is going to be cut way back next summer. What we were talking about before, Chairman and Alice Rivlin are talking about is we need fiscal stimulus to take the pressure off the Fed.
Right.
Fed doesn't think that QE2 is this riskless course. Their problem is no one else in the United States is going to do anything to create stimulus, and this is the best we can do. So I don't think you see stimulus coming from the federal government.